Let's do a comparative P&L analysis. You are given 2 years financial information, basically P&L related information. You have revenue from operations, other income, expenses, tax rate. Let's get started. So in comparative P&L analysis, what we'll do, we will be comparing the P&L related information for both the years and we will measure the changes. If you take revenue from operations, in 2024 it was 20 crore. It increased to 30 crore. So the change is 10 crore and in percentage terms, this has increased by 50%. Then look at the other income. It is 4 crore in 2024 and it has decreased to 3.6 crore. It means the change is 0.4 crore and that is 10% drop. So the overall income is 24 crore and 33.6 crore in 2025. So overall there is a growth. Between 24 to 25 the overall growth is 9.6 crore and it translates to 40% growth. On the expenses side, in 2024 it was 12 crore. In 25 it has increased to 21 crore. So there is a overall increase of 9 crore. It means expenses have increased by 75%. Next, let's do PBT comparison. 12 crore was the profit before tax in 24 and 33.6 minus 21. It is 12.6 crore in 2025. So the increase in profit is only 0.6 crore. Look at the increase in revenue from operations. It is 10 crore, which is actually 50%. If you look at the overall income increase, it is actually 9.6 crore, which is 40%, but they are not reflecting in profits. Profits have increased just by 0.6 crore and it is only 5% growth. So this will give rise to the question, what is happening? Why they are not able to get the benefit of increase in revenue? It's because this year their expenses have increased by 75%. What is the need for increase in expenses by 75% when the turnover has increased only by 50%? So that got to be analyzed. Next, let us also provide for taxes. It was mentioned it is 50%. So we'll provide for it. Tax at 50%. It is 6 crore and here it is 6.3 crore. So the increase in tax is 0.3 crore and that also translates to 5%. And look at profit after tax, it's going to be same 6 and 6.3. So that is also 5%. So the comparative P&L analysis means we will be comparing 2 years. We see where is the change, what is the percentage of change, and that gives rise to the question to understand the problem areas. So here the problem area is this: despite 50% increase or despite overall 40% increase in income, they are able to achieve only 5% increase in profit. So they have to address this problem area. And here we go, Credit and Financial Analysis Mastery course. It's a comprehensive pre-recorded online course that comes with 15 modules of video lectures, basically 70 plus hours of video contents, multiple ebooks and reading materials related to credit and financial analysis that will make up another 30 plus hours of content. So totally it is 100 plus hours of learning resources. Then you will also get access to a private community in Telegram for clarifying your doubts in credit and financial domain. Then you also have the flexibility to choose 1 year subscription or lifetime subscription depending upon your learning goals. So by joining this course, you will learn basics of credit analysis, how to read balance sheet, financial ratio analysis, cash flow, fund flow analysis, how to arrive at credit risk rating, how to prepare CMA report, cash budget, how to assess credit facilities like CC, OD, LC, BG, term loan, how to write bank loan proposal, and you will also have access to case studies related to credit analysis. So to join this course, to know more about the course, comment CFA, and I'll share the details with you.